Okay, now few of the formulas for the questions of break even. First, we have seen the break even point, how it is achieved, but proper formula would be number one, break even in sales, that is amount, dollar, is equals to fixed cost divided by CM, percentage of CM ratio. And CM is, for the record purposes, is sales minus variable cost. For break even in units, we will divide fixed cost with CM per unit. Then, or it can be like we did in previous session, that is break even sales in dollar divided by selling price per unit. These two formulas can be used to determine the break-even point in units. Third one is known as margin of safety. Margin of safety means the cushion we have, the leverage we have beyond which we could afford to go in the loss. Like this, from 1 million to 625,000, that is 525,000 would be our margin of safety. If the sales are lost by this amount, then we are still safe. That is the safety. So margin of safety would be formula sales minus break even sales in dollar or whatever. And similarly, next would be margin of safety ratio. Margin of safety ratio would be margin of safety in dollar divided by sales actual that was reported multiplied by 100. That is the margin of safety ratio. Then there are some common financial accounting ratios can also be calculated in some other ways. So it would be net profit to sales ratio. It is quite simple. Net profit divided by sales multiplied by 100. Or in terms of margin of safety, it can also be calculated as CM ratio multiplied by margin of safety ratio. This is another way to calculate net profit to sales ratio. Now, sales forecast, it is very important aspect. Sales forecast, that in order to earn some target profit, what we have to do. Let's suppose organization saying, okay, 150,000 is cannot be earned. So for break even, we can earn. We have to earn six. We have to sell 625,000. Now organization can make sensitivity analysis. What should I? How much amount I have to sell if I have to earn a profit of 100,000? Now we are targeting it. That's why it is known as target profit. So in order to earn some sort of target profit, what would be the CM, what would be the total sales? It can be calculated as fixed cost plus target profit divided by CM ratio. This is for sales forecast dollars. And how much I have to sell units in order to earn a profit of 100,000, then it would be sales forecast in units. Again, it would be fixed cost plus target profit divided by CM per unit. Next formula is operating leverage. It is CM contribution margin divided by profit of the organization, net profit before interest and tax. This amount would be given, or we have to either calculate it. And the next one would be financial leverage. It is profit before interest and tax divided by profit after tax. If profit before interest and tax is given and profit after tax is given, then this would be calculated, otherwise it would not be possible. Okay. One great formula for the CM percentage. Usually what we do, how we calculated CM percentage, that is CM divided by sales. In case if there is some data from which it cannot be calculated, we can look for this formula as well. Change in profit divided by change in sales. This formula can also be used for CM percentage. Now what you have to do now, you have to calculate all these items except 8 and 9, I guess, sales forecast, still sales forecast for this data. You have to calculate all this, and for this you have a target profit also of, if I have a target profit of, let's suppose organization wants target profit of $200,000, then what would be the sales forecast? So now data is this. You have to calculate break-even sales in dollar, break-even sales in units. Again, what we have done with the statement form or the formula form, you have to apply this formula and do it again. Then margin of CM ratio. Now from this formula, just simple formula, CM sales divided by CM divided by sales, CM per unit, then margin of safety ratio, net profit to sales ratio, then sales forecast when target profit is 200,000, and sales forecast when uh, units when the target profit is for 200,000. And we can also assume tax rate so that you can also calculate operating leverage. Let me tell you. Let's assume that it is profit. This profit is profit before interest and tax. Then you can calculate operating leverage as well. Done. So this was the basic break even. We will now continue for the further aspects of this break even.